This is Bloomberg Businessweek. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news. The Bloomberg Businessweek podcast with Carol Massar and Tim Stenovec from Bloomberg Radio.
Tesla moving over, sharp turn there, settling on the Nuevo Leon site in northern Mexico for its next massive car plant. Only 9 months ago, politicians and executives actually hailed it as a paragon of nearshoring, the idea that international companies will set up much more of their production in Mexico to be closer to the U.S., Tim. So the company investment in the country is expected to reach about $10 billion over multiple phases, but construction of this factory, which had been slated to make Tesla's cheaper next generation vehicles, is delayed due to Elon Musk's misgivings about the global economy. Other problems, including permitting delays and a dearth of infrastructure, have plagued the process. So joining us to walk us through some of these issues here, Amy Stillman is Bloomberg News Mexico business reporter, and she spoke to some locals who are now lowering their expectations as the car maker has held off on starting construction. So Amy is joining us on Zoom from Mexico City. Walk us through these issues. How did we get to this point, Amy?
Great. Thank you, Jess. Yes, well, certainly when it was first announced that Tesla would be setting up a factory in Mexico at the start of March, people were very excited. The local politicians, hailed it as the beacon of nearshoring, that, this is going to bring a huge amount of investment to Mexico. And it was also viewed by residents in the area as a great boon for the local economy. Now, fast forward about, 9 months or so where we're at now, and really, there's been no activity whatsoever. I went and visited the site. It's essentially, sort of desert along the highway with cactuses and no real construction going on. And one of the issues is that Tesla is still yet to receive certain federal and state permits for the construction. They have received a permit for the land use, which is a very, very recent phenomenon that just happened this week. But essentially, there is an issue around delays to permits as well as a lack of infrastructure. Elon Musk has requested that the government help in terms of road infrastructure. There's another issue around water access as well. And then you add those issues happening in Mexico to the fact that the global economy isn't doing as well, that Elon Musk doesn't see as much demand. So there's really been quite a significant change in the way that Tesla has been viewing Mexico.
What would you say is the biggest factor here? Does it come from Tesla, Amy, or is it coming from the Mexican government, given that the company is looking for concessions here that perhaps the government isn't willing to just hand out?
That's a great question, and certainly it's nuanced. You have a few opposing forces. The local state government is extremely keen on Tesla coming. In addition to that, that permit that I mentioned that was recently approved, the state government has also just said that they're going to provide a $153 million incentive for Tesla to come to help with the road infrastructure and also a reduction in the taxes around the payroll. They've done a ton. The governor has done a ton in terms of advertising around the fact that Tesla is coming. At the same time, the federal government has really tried to push forward development of the south of Mexico, not the north, which is where Tesla is headed. And there's been some concerns from the federal government that perhaps the investment should be in this other part of Mexico where there's more poverty. So there are some questions around whether the federal government will throw its full weight to bring Tesla over. Now, when it comes to Elon Musk, certainly, he seemed very enthusiastic about the project. It does raise a few questions whether perhaps some of the difficulties that they've seen have, changed his mind. He did announce in a recent interview that they're going to be working on the next generation, more affordable entry-level vehicle from Texas first, and then Mexico, because the plant won't be ready. So it's a little bit of both sides.
What do you think the potential repercussions for Tesla would be when it comes to production?
Right. Well, I think certainly we're going to see, a delay with the production. There was some speculation about whether the plant would be built at all. It certainly seems that, Tesla will continue to pursue this, that it will be constructed. But certainly the idea here, what local officials had said in the beginning was that, we were going to see production start possibly in 2024 next year. Now they're pushing that number back out to 2025, possibly even 2026. So that would certainly affect the rollout of this new generation vehicle. Much will obviously depend on how quickly they can get the factory up and running.
Amy, give us an idea of what's at stake here. I mean, after all, a auto factory is something that politicians in the U.S. fight over against one another because the economic impact of something like this can be so huge. It's not just the people who are hired at the plant. It's the ripple effects throughout a local economy of those, high-paying jobs. What's at stake here?
Yes. Well, that's certainly very much the case. And, as I said, the Tesla plant has really been the poster boy for this move toward nearshoring, which is, companies looking to invest closer to the U.S. And certainly if this plant, doesn't get up and running, that will look pretty poor. It doesn't bode well for other companies that are looking to set up here. At the same time, what we've seen is a real huge influx of suppliers to Tesla, that a lot of companies have come over, especially from China and other places, to be able to supply Tesla in Mexico. So they're starting to set up. So it will be very interesting to see as well, whether they're going to be able to continue with their plans. One company in particular that I spoke with, Yinlun from China, had said that, well, right now we're supplying to their Austin factory, but we set up here for the Mexico factory. So I'm sure they're also, highly anticipating that Tesla will get started. At the same time, the residents, as I mentioned, were very excited about the arrival of Tesla. There's still cautious optimism that this will help propel the local economy, help create jobs, not just in the Tesla factory, as you pointed out, but also, all the suppliers that are arriving and all of the supply chain that will require employees.
And you're speaking about those local residents. What are some of their top questions right now in the wake of all of this unraveling?
Well, certainly a big question is how soon will Tesla get up and running? I think that's definitely on everybody's minds. At the same time, there are certain questions around also, the talent, the labor pool. Residents are very excited about the opportunity to work for Tesla. I've also spoken to some local business owners. Funnily enough, there are some competing businesses that are less excited. They're worried about the talent being suctioned up by the Tesla factory. So there are some competing forces, but certainly overall, people are waiting. People are excited. They hope that more jobs will come.
Yeah, I guess the question that I have is, what kind of moves the needle here? What are you watching to see whether or not this factory actually happens? Is it a global change in demand for EVs? It's something that we've covered a lot here, especially when it comes to American companies like GM, Ford, and Tesla facing waning demand. Or is it something that comes from, perhaps something else? I mean, at the end of the day, Elon Musk is the one who makes this decision, Amy.
Of course. And I think certainly, there are pressures to get moving on electric vehicle production. Tesla's not the only company, you mentioned a few others, that has said that they would look to EV production in Mexico. We've seen a lot of big players, BMW, Ford, a few others that have also, said that they would be looking to EV production. I think a lot of those big companies are waiting to see what happens with Tesla as well, to see whether Tesla can achieve this goal. Will they move a bit quicker? Right. At the same time, you've got a pretty strong competition from some Chinese players like BYD. Tesla and BYD have been neck and neck, and that will certainly play out in Mexico, where BYD has announced recent partnerships in Mexico, is currently selling electric vehicles.
Whatever
potentially
happens,
looking to
we're going to be sure to have to check in with you. That's Amy Stillman joining us live on Zoom from Mexico City. Check out her story and more on the Bloomberg Terminal and at Bloomberg.com.
You're listening to the Bloomberg Businessweek podcast. Catch us live weekday afternoons from 3 to 6 Eastern. Listen on Bloomberg.com, the iHeartRadio app, and the Bloomberg Business app. Or watch us live on YouTube.
Well, it's been a wild year for crypto, Jess. I think it's fair to say that at the end of every single year, but there were some things that made this year unique. There were some arrests, there were multiple bankruptcies, and then, of course,
That's
Sam
right.
Bankman-Fried is in jail right now after being found guilty of stealing customer funds. He's awaiting sentencing in March. If any year should have upended this sector, this one would have been it, and yet it didn't actually happen because we have this crypto comeback brewing. Bitcoin's value briefly surpassing $44,000 earlier this month. That's its highest point in more than a year, fueled by all this anticipation over
That's
a
right.
possible SEC approval of a Bitcoin ETF. Joining us now to dig deeper into the future of crypto is Ophelia Snyder, co-founder of 21 Co., who joins us on Zoom from New York City. Good to have you with us, Ophelia. How are you?
I'm very well, thank you. Thank you for having me.
So how would you characterize the state of crypto right now? And I don't want to conflate crypto and Bitcoin, which a lot of people certainly do. Bitcoin is a cryptocurrency, but I think a lot of the optimism that we've seen in crypto this year has been the result of optimism over Bitcoin.
So I think optimism is probably a good way of describing the current state of crypto markets. I think we've had a very long and quite transparently, quite brutal winter across the space. I mean, you guys were just talking about some of these things, but it seems like now a lot of that has shaken out. There's a lot less regulatory uncertainty about some of the large players, Coinbase, Finance, some of these large names. We're starting to see a lot less uncertainty around. You've seen a lot of the bad actors get shaken out, and we've seen the industry really consolidate and double down. And I think you're seeing now the fruits of basically 18 months of people working on things. I think Bitcoin's certainly leading some of that narrative today between the halving, the ETF, and some of the interesting market dynamics that have happened there. But I think it's broadly true across the industry.
Like you were mentioning, Ophelia, we're waiting on the possibility of the SEC approval of a Bitcoin ETF. How much of that do you think has been priced into some of these crypto coins, including Bitcoin? And how much more and potential further room could there be for an asset class like that?
So I think people have, to some extent, priced in the expectation of an approval. But I think there's a little bit of mispricing there still. The reason being, crypto has never really seen big American style asset management money. It's never been possible really for them to enter the space. There's been a little bit of RIA money. There's been a little bit of sort of other institutional money, but it's tiny compared to, what is a couple of basis points on a multi-trillion-dollar industry. It's very different. And so quantum larger than most market participants in crypto currently have ever seen in terms of what that allocation really looks like once you start to get away from pure play retail or ultra sophisticated institutions. So I think the issue is, to some extent, yes, to some extent, no. I think it's going to take longer to see that money come in than most people are currently expecting, but I think it will be larger than what most people are currently expecting.
What makes you say that, Ophelia? Because I'm wondering that it's not like Bitcoin has been inaccessible to people at this point. I know to traders, they're really looking forward to ETFs just for trading and what they can do with those. But are there really people on the sidelines right now who are interested in getting into crypto who haven't?
So think about it really simply. Most people don't manage their own money, right? Whether that's your 401k or your IRA or, you're working with a financial advisor of some kind or, your local RIA, wherever that it is that you are. None of those structures have ever been able to really access this space. It's really difficult for an advisor to, support a client making that allocation. Historically, that's just been, I'm so sorry, we can't help you, try Coinbase, It's very different when an advisor can actually make a strategic allocation, or a client can request a strategic allocation from their advisor. It's a very different structure to that. So it's not people waiting on the sidelines per se. It's just most people's money is tied up in other ways. And, I set up my entire company with the goal of helping my mom get into the space. She started talking to me about this in 2014, saying, there's this really cool thing called Bitcoin. Have you heard of it? I have no idea what you're talking about. But
she's the one who told you about it?
Yeah, that's
pretty amazing. That's not usually. Yeah, tell us a little more about that, because that's not typically something we hear when it comes to crypto.
My mom's brilliant and came to me one day and said, Merck spends too much money on hedging, and global monetary policy is too reliant on an assumption of geopolitical stability to work long term. We need an alternative. It's going to help ensure better cross-border trading and be a long-term tool for economic stability and peace. Have you heard of a thing called Bitcoin? I have no idea what you're talking about, but okay. And that's actually how I started looking at crypto. But my mom, interestingly, despite completely getting the point, both on the monetary policy perspective as well as on the Forex side, she never actually made the allocation. And the reason she didn't make the allocation is that there was no way within her existing financial infrastructure, the way she does her tax reporting, the way she works with her advisors, that was going to make it possible for her to come into the space. Well, at least not in a way that she felt comfortable with, both from a technology perspective, but also purely from an infrastructure perspective. And that applies to both a lot of individuals, but also applies to things like funds. It's really hard to trade in custody of crypto. From a fiduciary perspective, the level of engagement that you need with your infrastructure. And I know that is a terminally unsexy thing to think about, but tax reporting and custodial and trading infrastructure is a huge part of what these fiduciaries need to provide. And they need to provide it to a certain level. And it's a completely different piece of infrastructure. It's not as simple as, well, you want it, we can sell it to you. There's always been a bunch of gates to this. And we've certainly seen that in Europe, where, we've been operating for the last 5 years and selling, quite frankly, similar products to what's being contemplated in the US. And we see a lot of our clients be people for whom, buying direct physical is just either not what they want to do or not an option.
Well, talk to us about regulation, because that's still pending in Washington, and the risks, because there's still a lot of skepticism when it comes to institutional adoption for crypto.
Yes, there is. And I think that it is changing. When I started talking to large institutions about crypto and blockchain and Bitcoin 5 years ago, everyone looked at me like I was completely out of my mind, and that this was just not something, didn't make any sense. Are you 100% sure that, this exists? How can you even have a digital asset? What does that mean? There were a lot more questions on basic viability and whether or not we were just nuts. I think that is no longer the case. I don't think really the doubts around, whether or not this asset's going to exist, going to continue to be built out. The value of blockchain to institutions, the value of smart contracts to institutions. And I think that's especially true in terms of Ethereum. And you're starting to see, large asset managers bring tokenization projects forward. You're starting to see more utility in cross-border payments. You're starting to see real use cases in everything from financial services to video games. And I think that's really exciting. And it's changed the dialogue, because now there's a real thematic here, and there's a real proven use case that's not solely contained to the crypto world.
Well, really appreciate you joining us this afternoon. That's Ophelia Snyder, co-founder of 21 Code, joining us on Zoom from New York City. Again, to get crypto on the Bloomberg terminal prices, just get up the dashboard. CRYP Go on the Bloomberg terminal. Bitcoin now at about $42,244.
You're listening to the Bloomberg Businessweek podcast. Catch us live weekday afternoons from 3 to 6 Eastern on Bloomberg Radio, the Bloomberg Business app, and YouTube. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Well, the MSCI Asia Pacific Index rallied nearly 3% this week. It was led higher by Australian, Korean, and Chinese shares as tech stocks climbed. Bonds rallied through the region, including in Japan and Indonesia. That's a sign that global investors are becoming comfortable with riskier assets. This after being cautious on investing in Asia over the past decade, as the investors dealt with deglobalization and slower economic growth in the region. Joining us now in the Bloomberg Interactive Broker Studio is somebody we check in with every few months. Jon Withaar is head of Asia Special Situations for Pictet Asset Management, usually based in Singapore, but when he comes to the U.S., we like to get him in the Bloomberg Interactive Brokers Studio. It's good to see you. How are you?
I'm great, thank you. How are you?
Doing well, thanks. What brings you to New York every few months?
A couple of things: meeting investors, talking to investors, research, touching base with brokers, analysts, those kinds of things. So, yeah, always a good trip. And I lived here for a while, so a bit of social.
How has the tone or the reception been this trip versus last time you were here a few months ago? Because a lot has changed since then.
A lot's changed, but one thing that hasn't changed is the sentiment around China.
Yeah.
So sentiment around China is pretty bad. It's pretty low. And we certainly haven't seen a tick up there yet. I think there's quite a lot of apathy. Positioning is about as bad as I've ever seen it. And so, I think we're sort of waiting for that to rectify itself.
Is it uninvestable, China?
I don't think it's uninvestable. I don't think that at all. I mean, hey, it's still the world's second largest economy, second largest stock market. So I don't think uninvestable is the right way, but there are risks. And certainly if you look at macroeconomically what's happening there are challenges that are giving pause for thought for investors.
So recently, though, what's sort of driving things when you have a backdrop of the past decade that has been so tough for equities in Asia?
Look, I think the main thing that investors really want to understand is the geopolitical. And that's obviously also the hardest as well. It's very unpredictable. And so, when investors are trying to frame their investment views around Asia, obviously you start with China and you try to understand what the risks are from the geopolitical perspective. And I think that's still something that people don't understand. It's hard to unpack. It's changing very quickly. And as a result, with the macro backdrop also being challenged, people are saying, look, we're sort of happy to sit on the sidelines at the moment.
What does 2024 look like? I mean, what are the opportunities that you're presenting right now to clients? Where do you see room to run?
Look, I think the first thing to say is that China's not dead by any means. There are opportunities in China. As I said, we are talking about a very large economy and we are talking about a lot of consumers there. So there are opportunities, and certainly we agree that you probably need a little bit more nuance in the way that you do invest in China rather than perhaps just directionally. But the story of 2024 will most likely be Japan, simple as that. Japan, we're seeing a lot of regulatory reform happening in Japan right now, listing rules around the TSC, focused on price to book improvement, ROE, these kinds of things. And so, there's a lot happening in Japan that's happening from the ground up level, from the corporate level, that is really exciting people, because we're starting to see a cheap market, a market that's historically cheap, finally unlocking value at the corporate level.
Is it hard to convince investors to allocate enough to Asia, given that there has been in recent years such a history of outperformance when it comes to U.S. equities?
Exactly right. I mean, that's the bugbear. Right?
I mean, that's got to be one of your biggest challenges.
100%. Look, at the end of the day, why? If it ain't broke, why? Don't fix it.
Yeah.
I mean, if you look at what's happening right now in the U.S. markets, I mean, why would you take money out of the U.S. markets?
Doesn't
right
make
now?
your job any easier.
Doesn't make my job any easier, but also it creates opportunities as well. So there's still value opportunities out there. There's still a lot of event-driven situations that are interesting to us. You get stocks that do large buybacks or takeovers, MBOs, these kinds of things. There are opportunities there, regardless of who's involved. So that's interesting to us, and that's why you are seeing these high levels of transactions, because of that apathy to the market.
What are some of the top questions and concerns that you hear from your clients?
I think in regards to Japan, the question that you always get is, why is it different this time?
Right.
We've seen these instances before, as we know, around Abenomics 2014. We saw the market move up very, very sharply, and not just to give a pullback a few months afterwards. So there is that level of skepticism, but ironically, that skepticism exists both from international investors and the local investors themselves. But it's worth noting that the regulators, the Tokyo Stock Exchange, METI, and even Kishida-san himself, the PM, they're very focused on making it different this time. And so they're approaching it from an angle of corporate reform, creating companies that are more robust, balance sheets that are more streamlined, and ultimately focusing on shareholder engagement, shareholder returns, and ultimately efficient markets.
Jon, when do you think you'll come back here and sit down with us and say the last year in China was a very good year?
I mean, I hope it's next year. But like ultimately, it's really difficult to tell. I think
is the government setting it up for 2024 to be that? Are they doing the right kind of reforms? Are they doing the right kind of stimulus?
Great question. I don't think we're seeing that yet. I don't think that's clear. I think
it seems pretty targeted.
It has been very targeted. There has been loosening, but ultimately we have not seen this, quotation fingers, bazooka stimulus that people have been waiting for, and that may be a red herring itself. So we're all waiting. I think ultimately what we'd really love to see is a thawing of geopolitical relations, a thawing of the standoff that we've seen, but it's just difficult to see with 11 months out from an election. This is an election talking point. Mm-hmm. So we're ever hopeful, ever green, but I don't think there's anything immediate that gives us anything that to be spectacularly bullish about, at least directionally. Mm-hmm. Other than positioning, I should say.
Right, and especially when you're talking about sort of different conflicts, whether you're thinking about when it comes to the U.S. versus what's going on with Beijing. What about when it comes to those repercussions, particularly with industries like chip makers, technology stocks, which really took off this year after getting so hit hard last year? How do you view that, particularly when it comes to Asia equities?
Yeah, so I mean, look, we really are seeing a bipolarization of the world and technology along with that. So it's very, very clear the big beneficiaries of this whole sort of decoupling have been the US chip companies, Taiwanese companies as well, obviously TSMC, and then as a derivative to that, the Japanese technology guys as well. So we are seeing winners and we are seeing losers from that. But it's not just the American chip guys that are winning here. It is the others as well. It's the Taiwanese, the Japanese as well, and not to mention we've got a lot of investment in semiconductors and technology into Southeast Asia as well. So you look at places like Malaysia, that's becoming a kind of a semi-hub as well. So there's a lot of investment going south, and then obviously the big gorilla in the room is India. A lot of growth happening in India, not necessarily in the semiconductor space, but a lot of growth happening in India.
Yeah, a lot of investors hoping it's the next China.
Well, I mean, the GDP print was brilliant.
Right.
I saw the GDP print the other day, but
And Jon, we love it when you join us. We got to run. Jon Withaar is head of Asia Special Situations for Pictet Asset Management, joining us here in the Bloomberg Interactive Brokers Studio.
I'm driving in my car. I turn on the radio.
Yeah, how about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's the question that drives us.
This is the Drive to the Close
That funky music will drive us till the dawn.
on Bloomberg Radio.
Well, here we are. Hard to believe it's already close to the end of another week, and it's another week of green. Look at that.
So much green.
Yeah, the S&P 500 is on track for its 7th straight week of gains. That, if it holds, which it looks like it will, would be its longest winning streak going all the way back to 2017.
Wow.
Yeah, look at that. We'll see if what happens next week.
Yeah.
Let's go to our Drive to the Close guest. We got Brooke May, managing partner at Evans May Wealth, joining us on a Zoom from Carmel, Indiana. Good to have you with us, Brooke. How are you?
I'm well, thank you. How are you?
Doing pretty well. Did this rally starting back in October, on October 27th, up about 15% on the S&P 500 since then, did this catch you off guard?
A little bit. We were optimistic going into year end. It tends to be a good time for the market. November and December tend to be two of the best months. So we weren't completely caught off guard, but 15%, that's more than we expected.
Brooke, whenever I spoke with you in the last couple of weeks, you were talking about leading into this Fed decision earlier this week that the Fed fears that any signal from policymakers that a rate cut could be coming may cause another big rally in asset prices. And we got a big rally there. But what's your take on the way that Powell's tone was in this particular speech? Because a lot of people were thinking he would push back harder against that, but not quite as much ended up as people and investors were thinking.
Yeah, I was in that hawkish camp. I thought that the comments were going to be erring on the side of caution to ensure that we didn't get that asset price elevation that we saw. So his comments, indicating that rate hikes will be coming. Obviously, the market responded favorably. He didn't say when, though, and I think that a lot of investors have started to price in the first quarter, and I don't think that'll be the case
You don't?
unless we see unemployment tick above 4%. I think
So
that
you don't
could
think the
be
Fed
the
is going to? You don't think
catalyst.
the Fed is going to cut rates in the first quarter unless unemployment goes above 4%?
I don't. I think they're going to take the opportunity to be patient. We're clearly now on that path to 2%, which is the phrase that they had been using for several quarters. We're on the path at this point. There's no question. And so are they going to wait until we get to 2%? Probably not. But they're going to have the ability to be patient if unemployment stays sub 4%. And right now, with the economy looking the way that it is, it's very possible.
So given that that's your thought, do you think that the markets are kind of over their skis when it comes to expectations for rate cuts?
Yes, I do. But that doesn't mean that we're expecting or forecasting a crash or a significant pullback in the market. Right now, any type of pullback we're going to see as a buying opportunity. When we look out to the end of 2024, our price target is 5,200 to 5,400 on the S&P, which a few weeks ago seemed like a stretch, but with the rally we've had, that's really only 10 to 14% upside from here. So if we see the earnings growth that we're expecting, we think that we'll see earnings up 11% from this year to next year. At 19 times forward earnings, it's reasonable that we could get there. When we look at Q3 earnings announcements, companies, they were able to prove that they can navigate a higher interest rate environment. They've had 2 years to prepare. So we think that that'll continue where earnings are a little better than expected, and therefore the market will continue to rally.
When it comes to some of those buying opportunities, how are you advising clients to position? What are you telling them to buy? What are you telling them to sell?
We don't think you can be sector specific or really even asset class specific right now. We're taking kind of a bottoms up perspective. We're looking at individual companies one by one. As you can see, the Russell 2000 has really rallied the last few weeks. And if you peel it back and look at Russell 2000 companies, about 30% of their debt is at variable rates. So they're not necessarily in the clear yet, especially considering that only 60% of Russell 2000 companies are actually profitable. So we're going to be very selective. It doesn't mean we wouldn't buy small caps in this environment. We think that that environment is improving, but we're going to look at the fundamentals for each company, and we want companies that have low leverage and strong balance sheets, really good free cash flow.
How are you looking at fixed income right now? And I just want to bring our Bloomberg audience a headline that crossed the Bloomberg terminal moments ago. The Treasury 30-year yield falling below 4%, the lowest since July. So we're seeing yields fall at the long end of the curve, but move higher today at the short end of the curve. Still, the drop in yields that we've seen in such a short time has been pretty remarkable. How are you watching the bond market?
It really has been. Remarkable is a great word to describe it. We got excited about bonds 5-6 weeks ago whenever
that was a good time to get excited about bonds.
Hit 5%.
In hindsight.
We are equity biased. Over 80% of our portfolio is allocated to equities. Our clients are high net worth and ultra high net worth. And oftentimes they've been investors for decades. So they're comfortable with that volatility, and we've over allocated in that space. But a few weeks ago, we said, you know what, it's time to buy some bonds because we could get really good yields on municipals and high quality corporates. Now we're kind of back to a level that we've been seeing, over the last few years or so. So we're not as excited, but for our clients that do have a small allocation to bonds, we think that they'll have decent returns over the next few years.
We've seen the 10-year Treasury yield come down a percentage point since October 19th. That's when it briefly crossed above 5. But at what point, because clearly this has been supportive for equities as we've seen yields come down dramatically, but in your view, when it comes to fixed income, at what threshold are you watching to where yields are coming down so quickly that it's more of a concern about potentially the economy?
Yeah, the bond market tends to be a great leading indicator, oftentimes better than the stock market for what's to come. And right now, we think the 10-year Treasury will be in a trading range from 3.8 to 4.5%. And so if we see a significant drop below 3.8%, that would be telling that there might be some issues right around the corner. But right now at these levels, we feel like it's not signaling that anything of a significant magnitude is going to occur in the near term.
How much do equity markets have to drop for you to see a buying opportunity in the next few weeks?
3%, 5%.
So
we tend to be fully invested.
You said you are fully invested?
We are. We tend to stay fully invested. We keep minimal amounts of cash on the sidelines. But for clients that are depositing money or wanting to dollar cost average in, we're telling them right now, let's not wait. Any pullback at all, let's go ahead and get invested, because you can't time it. And we think the next 6, 12, 18 months are going to be really good for the market.
Brooke May, thanks for joining us and taking the time this afternoon. Really do appreciate it. Brooke May is managing partner at Evans May Wealth. She joins us this afternoon on Zoom.
This is the Bloomberg Businessweek podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 3 to 6 Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.